I almost don't want to discuss the second quarter GDP because we know it's going to be distorted by the Shanghai lockdown base effect. But what will you be looking out for when it comes to the domestic activity numbers? Retail sales in particular looking quite worrisome.
Yes, indeed. I think for the second quarter, the base effect plays a big role. So year-on-year growth is probably going to be around 7% for the GDP. But on a quarter-on-quarter basis, we think the sequential momentum has slowed significantly, maybe running just above 1%. For retail sales, I think the June number, the lockdown last June was over, so the base effect changes. So the June retail sales probably are going to come in between 4.5% to 5%, much weaker than the double-digit growth in May and April. But I think sequentially it's just flat compared to May and June. So basically we are not seeing any pickup in domestic activity momentum in June compared to the very weak April, May. That's what we are looking at.
We're also looking at the PBOC likely to hold the one-year medium-term lending facility rate steady at 2.65%. When it comes to sort of more big bang fiscal monetary stimulus measures, first of all, are we expecting them still? And second of all, will they have the sort of impact that they would have historically, given that we know that, stimulus measures are getting less productive as time wears on?
Yeah, we are still expecting some stimulus measures because I think growth has slowed really dramatically in the second quarter. And in addition to the weak exports, which is an external factor, domestic demand, especially on the property side, both starts and sales have come down to basically the bottom of the fourth quarter, which was the fourth quarter last year. So I think the authorities really need to stabilize the economy from here. The measures, I think, more effective at the moment would be fiscal. So more spending on infrastructure, ideally more for household, but that's going to be very unlikely. And perhaps also more funding support for developers to finish the unfinished projects, as well as easing of the property policy in terms of tier 2 city restrictions on purchase, lowering down payment requirement for second homes, and so on. I think those are still very much needed. Monetary policy side, I think credit growth stabilized a bit in June, but more is needed because credit growth has slowed very sharply in the last 2 months. So they need to become accommodative. Rate cut, not a lot of space, and also probably not very effective at this moment, given very weak confidence and weak demand from the corporate and household sector. So it's really fiscal and property.